Welcome to Java. Thank you for joining me. It's November 3rd, 2024. It is Sunday. We are not only looking at what is coming at us for this week ahead, but also a few of the events that occurred in the past couple of days that are pointing towards imminent, serious problems that we've got that are showing themselves in the economy, not just the United States, but globally. We've got a lot of issues here I've got to bring up to you. There's so much to cover. I'm going to hit some highlights. If you're not in the Discord group, I encourage you to come in for at least the chat. Read through some of it if you can, because we've got some updates there. But there is quite a bit going on here. So with this, let's start with our favorite risk indicators, 284.2. That is a significant rapid increase over what it was closing on Friday. And what is in the basis of this is the rapid increase of the 10-year yield, bond yields. The debt market is really showing serious volatility. And we've got a big problem on our hands, namely, United States debt is now unrecoverable. So with this, we've got the relative strength of the dollar also increasing 104.32 as it is defended by their policies. Now we've got fear greed meter still in neutral. Now we haven't seen a dropout in retail investors, but we're going to go into this in a bit because the smart money has gone to the sidelines as of this past Thursday and Friday. Now we've got a lot of things coming ahead. Obviously, factory orders on Monday aren't going to be the big news. The big news is the United States elections on Tuesday, which may not be resolved that evening, but we'll look at our trade deficit as far as the markets are going, PMI, and then we've got on Thursday, the Fed's rate decision will be coming out at 2 p.m. So Jerome Powell talking about the cuts. Now, they're talking about the jobless numbers, which is their main measure at the moment, as well as inflation, not going to affect them much. We'll get into that in a bit. So consumer sentiment actually plummeting in reality, but we'll look at what they're polling. So with both of these, we've got Bitcoin dropping significantly, 68,800 right now, and taking the market down a bit, but still above some strong support numbers. We're looking at 64 to hold through this, but we'll see. We've got extreme volatility with all of this Federal Reserve poised to look past United States election uncertainty. And what they're looking at right now is a 1/4 point interest rate cut. At the moment, doesn't look like anything is going to affect that. So Fed and peers, interesting that they put it this way, meaning other central banks will stay in lockstep with them, will go ahead with the rate cuts after this week's United States election. More easy money, more, basically, this is a different form of quantitative easing, flooding the markets to keep them going. We've got the inflation trade in full swing. So with this, the sentiment, extremely volatile. Be prepared for anything. I'll likely do a very short one Monday morning just to see where the stocks are in the markets prior to open. So with this, we getting some more earnings reports for this week. This is the table of the larger ones that we're expecting quite a good spread. But I would like to go a little bit larger. We've got Palantir up here, so you would see, and then Super Micro. So with these, it's going to be a very interesting week. With this, I want to go more into the real economy as we see it. The measure that I am looking at, as well as most of the economists, they change all of their numbers. And with all of their numbers, it is very difficult to believe what is actually going on. Now, they reported basically that inflation is tamed. However, we've got mortgage rates jumping to just under 7% again at 6.72%. This will likely have heavy pressure in the home buying sector. This is mostly for residential real estate, but could spread very rapidly into the commercial sector. We've got these treasury yields, as I was saying, rapidly fluctuating. The 10-year rising as high as 4.35%. This is, they're saying that this is because the economy has stronger than expected data. So let's dig into this a bit. Okay. With this, I want to put in a reminder that gold is basically normally viewed as a hedge against inflation, and that is why gold prices are skyrocketing. So look to two things: the 10-year yield and relative strength of the dollar. Then that is two, but if you look at the MMRI, it's consolidated them, and then look at the price of gold. Those two together have a story aside from the numbers that they are basically manipulating. So we've got charting the global economy, US job growth, tanks ahead of the election and the Fed meeting. The final jobs report that came out last week prior to election day showing economy added 12,000 positions. They're blaming the strikes and the storms. Now, while that is a large part of it, it's hardly the real story. So basically, we had September jobs report should have been closer to 120,000. So when it first came out, a lot of people thought that they had missed a zero, but it's not the case. So while this is indicating a rise in layoffs and discharges, they are not looking at this real economy. Unemployment is rising, just not according to the way that they are calculating it. Now, what is going into this? Basically, they are talking about the strikes from Boeing taking off about 44,000 jobs. They're also talking about the hurricanes that had taken out an additional 15 to 20,000 jobs. If you add those up, they still don't add up to the deficit that we are looking at. In addition to that, they also lowered the jobs numbers that they had gotten for previous reports. They adjusted them down. It's not a surprise because we know that basically unemployment is rising rapidly. And in reality, we've got another story. TGI Fridays is just an example, filing for bankruptcy again over the weekend as sit-down restaurants struggling. Well, it's not just sit-down restaurants. They're struggling with the price of labor as well as the price of food to make it profitable. So as more of these companies close, mid-sized, large-sized businesses, TGI Fridays is not small. They're going to be laying off and cutting back on the workforce. This will spread to the corporate world more than it already has. Now, there are a lot of, basically, this is what I'm saying, that the big money already sees this. They're scaling back because they see all of this weakness. Now, with these mixed signals from the labor market, a large part of this they're talking about is the non-farm payrolls. Now, I would like to bring up, and I don't have something to show you, but basically, the farming payrolls are based off either their families and members or foreign workers they import to basically work seasonally. So why does this have an issue is because basically this is imported labor, and we'll talk about that a little bit more. It's not local jobs, and the corporations are beginning to fail, at least the mid-sized ones. Mid-sized businesses, middle class in target, but it is expanding, no longer middle class. It is now also white collars. You are going to become in the crosshairs next. So with this, I'd like to move over into Berkshire Hathaway. Basically, Warren Buffett, cash soars to $325 billion that he's sitting on, selling shares of Apple and Bank of America because their operating profit is falling. Now I'm going to go into this blockchain design in just a moment, but the basically accountability for a bank when they fail after doing what they call redlining, who is responsible, because we're going to see much more the smaller mid-sized banks failing coming forward. Now basically they want to blame the takeover banks and the FDIC. In the past, though, FDIC has already washed their hands and basically said that they're only going to take limited responsibility and not cover these things. So what is going on in the background? This is really the major plan, basically, to shift towards the crypto market, or to say CBDC, central bank digital currency. I have proof here. They are talking about going to distributed ledger technology, but centralized. They're backing these with Treasury, which is the United States debt. Now, they're tokenizing these, putting them on blockchain, but they want them all on one ledger and to be programmable. Now, let me go a little bit into what the difference is. You can have Bitcoin is public. Everybody can see where the transactions were and trace them. However, it is permissionless and decentralized, so no one person has control. They've also got the other side, which would be public, but permissioned, meaning controlled, or private and permissionless. These are the ultimate private coins. However, they're very difficult to trade with and have not grown ideally to a way that we want. So what the government wants is an ideally managed by, this is an oxymoron, trusted government authority, so that they can control these treasuries and the trades. So central banks, basically, they will all tie in with Bank of International Settlements. The Federal Reserve will basically be at the head of this. And when they do this, they are not allowed to have private citizen accounts. So what do? They use custodial banks. So basically, you would have your wallet with the bank like you currently do, and they have their bank listed with the Federal Reserve or whatever central bank you're currently under. Now, this is simply a pass-through. It is basically a convenience they have at the moment. They will wipe it out later. They're going to one central bank digital currency. And this is also going to be master KYC, where they know all of your details, tie it all together, and we'll have it programmable. There's much more on this I can't cover here. So with this, they're also mulling. The US Fed is saying that a Bitcoin ban could preserve deficit spending. Why do they say this? Bitcoin would basically hold them accountable to a certain amount that they could spend, and they don't like that. They must ever increasingly expand on this debt. Okay, this is a large subject. It's very complicated. They have made it complicated, so most people can't understand this. But the way to get out of this is holding your own assets. Gold, silver, Bitcoin are my favorite, not financial advice. You do what you would like. So I've said many times, we are in a war economy, and I want to hit on a couple of things here. These tie into the banks, and I cannot stress this enough. There are details behind this. Feel free to comment on this or ask me questions if you have questions about why I'm tying these two together. We are in a war economy. If we cut war spending out of the GDP, gross domestic product, of the United States, we're in a definite recession at the moment, if not depression. We've got hyperinflation coming, and they're basically pinning all hopes on reconstruction as to pull us out of this. Now, let's go into these stories. Israel now carrying out ground raid into Syria. Okay, so we've got Syria, also Lebanon, clearing their first quote unquote belt in Lebanon on the border. There's a larger agenda here to clear a swath of land for access. I'll probably cover this later. I don't want to cover this here. We've also got Iran, supreme leader, threatening US and Israel with a crushing response over their attack. So, three nations right here. On the other side, with this, along with Ukraine, Zelensky urging allies to act before North Korean troops reach the front. Now, this is with the Russian war. So that's two more immediately added into the pot. United States, whether it's through NATO, Western countries taking on too many fronts. There are dire things happening. Please prepare for this. Now, I know this seems like a lot of doom. Basically, the way out of this, hold your own assets, get into communities, the number one thing you can do. And with this, they're trying to destroy the United States local cultures, Western culture. An example of this is a Civil War museum. They're shuttering this, as well as taking down the history. So if you have old history books, hold on to them. They cannot change those. They can change anything on the internet. We've got other things going on with that as well. With that, I'm going to leave you for now. See you early in the morning for at least a short on how the markets are looking. Until I see you again, my friends, stay free.